So it sounds like 2026 is going to be a great year for precious metals.
I sure hope it is. I mean, 2025, it was just an absolute banner year, but it still feels like it's still in the early stages.
John, I'm sure you would agree with me when I say 2025 was a remarkable year in the global economy and the financial markets. We started the year with a lot of volatility and uncertainty associated with the tariffs. And because of this uncertainty, we saw some seismic shifts in various asset classes, and especially in gold and silver. And I want to discuss some of the products that you offer for investors and what you've been seeing in terms of flows. And given that the Sprott Physical Gold Trust is the largest of these trust products, why don't we start right there? What sort of flows have you seen this year, and what is the AUM?
Yeah, well, it's kind of interesting because last year when we sat down and spoke, we were kind of frustrated that the price of gold was up about 25% in 2024. And I think it was about 300 million of net flows had come into the Physical Gold Trust. And we were really disappointed by that because investors weren't really paying attention. And this year has been a real sea change. We've obviously have the price of gold up another 50+%, which is the second best calendar year performance since 1970. Only 1979 has eclipsed 2025. And on the flow side, we've seen $1.5 billion US come into the Physical Gold Trust. So much better alignment between performance and investor interest. And obviously the trust has grown enormously, now about 15 billion in size.
And as you mentioned, 2024 was a good year, up 25%. 2025, it's up over 50%. What's driving this performance? What are the economic factors that are creating this interest?
Yeah, I mean, the gains that we've seen over the last 2 years are really unprecedented. I mean, gold is not designed to go up 25 and 50% per annum. You know, over the long term, it tends to go up 8 to 10%. So what's driving it? Obviously, really powerful forces. And those forces range from shifting geopolitical risks, de-dollarization that many central banks are undertaking, where they're looking to reduce their exposure to U.S. treasuries. And in many cases, they're recycling those dollars into physical assets like gold. We've seen a number of central banks increase their allocations to physical gold. And the other powerful driver is investors are returning to gold after last year kind of ignoring the gains. We've seen very strong inflows globally across North American investors, investors in China, investors in India. And gold ETFs have been a big, big winner, where obviously tens of billions of dollars have flowed into these products as investors are trying to mitigate against uncertainty and risks in their portfolio, whether that is related to potential bubbles related to AI and equity markets and valuations, whether it is geopolitical and trade tensions, and obviously tariffs have created a lot of uncertainty across global economies and supply chains.
And you mentioned central banks have been large buyers in recent years, and according to the World Gold Council, they are acquiring anywhere from 25 to 30% of global production every year for the last 3 or 4 years. And why do you think they're doing that?
Yeah, I think gold is kind of, as I mentioned to you a year ago, I mean, it's reasserting its role as a monetary metal. And, you know, central banks around the world have historically held part of their reserves in physical gold. Unfortunately, countries like Canada is not on that list. They've long since sold all their physical gold, which is a real shame. But other central banks are deciding to hold more gold. And it's not just China. I know everybody focuses on China, but it's a number of central banks, including Poland, Singapore, Turkey. They're holding more physical gold. They're reducing their exposure to other fiat currencies. And I think this is part of a structural shift that's going on. And it's not transitory. This is something that will play out over a number of years as they all reach their targets. They all have targets in mind in terms of how much of their FX reserves they want physical gold. Some of them are, as you mentioned, could be 20 to 30%. China is still pretty low in terms of their overall mix. And we know that China has enormous amounts of US treasuries that they are actively selling and recycling into gold. And that's a very powerful, I think, bid on the price of gold amongst a group that is not so price sensitive like you would have with some investor groups. So we think it's a very profound structural change. And on the institutional and individual investor side, they're kind of mimicking what the central banks are doing by putting gold into their portfolio as well as a hedge against some of the currency risks, obviously trade risks. And they're also substituting treasuries for gold because treasuries are not having the same kind of safe haven characteristics as they have in the past, given the huge debt loads of many governments around the world.
And you raise a very interesting point. One of the things we've seen in the last 5 years, just not in the US, but with many countries across the West, is money printing, excessive money printing. And if you look at the money supplies measured by M2, in January of 2020, the M2 was $15.4 trillion. Here we are 5 years later. It's now at $22 trillion. That's an increase of 42%. What sort of role do you think the money printing is playing in the move in gold?
Yeah, I think it's having a huge role. I think people are looking at the amount of money printing and the debt loads and the debt service requirements, and they're becoming very concerned about debasement. And this is a term at Sprott, we've used for years and years. But now what we've noticed is the mainstream media is using this term, and investors are starting to ask, well, what does this mean? Now, if you're an investor in Argentina or Turkey or some other country like that, debasement and hyperinflation is just part of everyday life. But I think Western investors are starting to think about this because their purchasing power of their currency has been eroded as governments have printed a lot of money. It's getting incredibly hard to roll over debt. You're seeing the US Treasury having a very difficult time selling any kind of long-dated bonds to anybody anymore. And so they're kind of the buyer of last resort. The other thing I think that people are focused on is the independence of the Federal Reserve. That's now under question. And the last factor is around running a very hot, fiscal policy where governments are spending money like crazy on all kinds of initiatives. And that obviously creates inflation, and that returns the real return on things like treasuries. So your real returns are being eroded by all of this fiscal spending and very high levels of money printing.
You touched on the Fed, and the Fed has been very dovish here in the last few months. They're cutting interest rates, and they're doing so at a time when the economy continues to grow at 3% plus, and we still cannot get inflation down to their 2% target. And so this is also resulting in higher inflation, and that's also creating more demand for gold.
Yeah, I think the days of the 2% inflation are gone. I mean, obviously that's been a long-standing target by many central banks. We've never believed that the inflation numbers reflect the true cost of living for most people. And I think it's pretty clear that the Trump administration would like much easier monetary policy, which will be more inflationary, and that inflation is going to be allowed to run at higher levels than I think we've all been accustomed to. And I think that's another reason why treasuries are becoming less attractive to investors, and physical gold is a nice, I think, substitute in many cases to treasuries, which are yielding very little on a real return basis.
And we cannot have a discussion on gold without talking about the US dollar. It's down 10% on the year. It's measured by the DXY. What are your thoughts on the US dollar? Where do you see it going?
Yeah, well, there's kind of two sides of the story. You have an administration that always talks up a strong dollar and positions themselves as champions of a strong dollar. The reality is the dollar, as you said, is down a lot this year. That has definitely been a big boost to gold. And we think that it's inevitable that currencies weaken when the world is fractured in terms of trade policy and relations. One of the easiest things to do in a trade war is to devalue your currency to make your exports more competitive. And I think it's fair to say the US is playing that game. Even though they're talking a big game about the dollar, I think they've let the dollar kind of slide as trade relations have soured.
There are many well-known investors that have been bullish on gold for quite some time. Ray Dalio comes to mind, also Jeffrey Gundlach from DoubleLine. And just recently I saw an interview with Jamie Dimon of JP Morgan, and he said for the first time in his career, investing in gold is becoming semi rational. And he also mentioned that he thinks gold can go to $5,000 to $10,000 in this current economic environment. What are your thoughts on that? And maybe you can also add why investors should consider adding gold to their investment portfolios.
Yeah, well, it's amazing to us that some of these big name banks, JP Morgan, Morgan Stanley, Goldman Sachs, Bank of America, they all have price targets for gold that is higher than where we are today. And these aren't small targets. Obviously, we have some banks predicting gold as high as $5,000 next year. And to us, it's almost unheard of because most of these banks have always had price targets below where the current spot price is. So it's a real sea change in terms of their point of view and what they're advising their big institutional and high net worth clients to do. So I think that's really, really interesting. We also think that most investors are woefully underexposed to gold. When we survey different investor groups, we find most of them don't have any exposure to gold at all. And I think for good reason. For many years, everything was working just fine in the world, in the global economy and trade relations. And now people are thinking very differently about equity risks. We've even had some of the major banks suggest new asset allocation models that are replacing part of the treasury or fixed income allocation and moving up to 20% into physical gold. We've never seen that before, or we haven't seen that in decades. So it's a real different message that the marketplace is receiving. And at Sprott, we've been investing in gold for decades. We've obviously advocated having gold as the ballast in your portfolio. It lets you invest in other asset classes. It typically acts as a safe haven investment. In tumultuous times, it works very well, and that's the value of gold. And we're starting to have more and more conversations with people for the first time around gold in their portfolio, and obviously our flows reflect that. We've had a lot of success with our physical gold trust this year. But we still think it's very early, and it is not a crowded space. Even though gold has gone up 50% plus this year, we do not see everyone tripping over themselves to buy gold yet. So we still think we're in the early innings, and it's a very supportive backdrop that we think is more structural in nature.
As you mentioned, gold's had a very good year, up over 50%. Silver has had an even better year. In the past, I have to admit, I've been somewhat skeptical about silver and investing in it. And I think that's because we saw so many false starts over the years, right? It had a hard time getting through that $50 level, which was the high that we saw back in 2010, 2011, and it finally did it in 2025. So with this move that we've seen, what are the flows like into the Sprott Physical Silver Trust?
Yeah, I mean, we completely agree with your point of view around the frustration of silver for a number of years. It took a long time to finally get the old high behind us, which I'm very pleased has happened, and we've obviously built momentum on top of that in the last few months. We've raised about $1 billion in the Sprott Physical Silver Trust, which is really, I think, a good sign that investors are paying attention. We have the second largest physical silver fund in the world, and we've been a really big buyer of silver. And silver's been very interesting this year. It's I think up almost 100% now for the year. So it's had a huge move after lagging, the gold price for a period of time. And we're starting to finally see some pretty meaningful, I would say, institutional inflows globally into silver. We've also seen very active buying of silver in places like India, which are starting to substitute silver because gold has become very pricey for them. So silver's got, I think, some very interesting dynamics, and it feels like it's just getting out of the starting blocks after being kind of stuck at very low prices for an extended period of time.
So the move in silver seems to have accelerated here in recent months, especially after it went through $50 and then $60. But why is that?
Well, I think the market's finally taken notice that there's a deficit in silver. We've had this deficit building for a number of years, and what you're starting to see is new buyers emerge for large amounts of silver, and institutional investors and retail investors, I think, are a big part of that. They're starting to buy silver because of its value relative to gold. There was a point earlier in the year when the exchange ratio between gold and silver hit 100 to 1, which was very extreme. We're now well below that as the price of silver has gone up and closed that gap. And silver is, scarce. We don't recover all the silver that is used in industrial processes. There isn't as big of a above ground stockpile. And you're starting to see shortages of silver emerge in London. You're starting to see very low levels of silver in places like China. And we know a lot of silver gets consumed for solar panels and is not recovered. So as the world builds, more and more solar farms, that silver, goes to silver heaven.
And John, you and your team are always on the road meeting with investors. What are you hearing from investors, institutional investors? You mentioned earlier you still thought there was not a whole lot of interest in the space. Is that true when you travel across the US and when you travel across Europe?
Yeah, we're starting to see a lot more interest in precious metals. In the last 6 months or so, they've really kind of been awakened, and they're asking themselves, how are they positioned? And most of them have concluded they don't have any exposure or too little exposure, depending on what benchmark you're trying to track. And I think that's very healthy because it's still pretty early in terms of the money coming into the sector. We still see some of the ETFs in net outflow, so it's not like it's across the board people moving back into the sector. But people, I would say, when I say people, I should say more specifically, generalist investors are poking around more and asking themselves, how best to get positioned in either the physical or the mining stocks. And I think that's really healthy. We saw a similar situation 3-4 years ago with uranium, where people had very little exposure. The market was just kind of waking up. And it feels as though we're having similar kind of conversations with investors right now about gold and silver.
So it sounds like 2026 is going to be a great year for precious metals.
I sure hope it is. I mean, 2025, it was just an absolute banner year, but it still feels like it's still in the early stages.
Now, one thing that Sprott does well is they do an excellent job educating investors on the benefits of investing in not only precious metals, but base metals, so many more. If people want to see some of this research, where can they go?
Yeah, I mean, we really pride ourselves on all the outreach we do and all the education through our monthly reports, our podcasts, our webcasts. We're really active, so go to sprott.com. Go to our insight section. There's a whole bunch of content about all these different metals markets, and education is really important for us, so we appreciate all your efforts to help us in that endeavor.
And it's all free. There's no paywall.
No, come to the site and soak it all up.
John, thank you for sharing your thoughts on gold and silver today, and all the best in 2026.
Thanks for having me.